Good afternoon and welcome to SFI Live. Slightly different to usual, new setting. So we're going to try a studio format. Do let us know if you can hear us, if you can see us okay. Pop your comments on LinkedIn and we will see them. I'll go around and just introduce everybody. I don't think everyone knows who Tony is already. We'll go around and introduce everybody and then we'll crack on. But just so everyone knows, if you have any problems hearing us or seeing us, pop it in the chat room and we'll see what we can do to sort it out. So to everyone else, I'm Jay, the host. Anybody who's watched this before will know who I am. So let's go along the line to a new face on SFI Live.
I know, my debut.
Little introduction, tell me who you are.
Yeah, of course. So I'm Lizzie Clack. So I've been at Saffron now just over 9 years, but I've been within the BDM team for I think about coming up 2 or 3 years. And yes, I'm the telephone BDM looking after Midlands.
And Lesley, good morning, afternoon, should I say.
Hi, I'm Lesley. I've been with Saffron just over a year now. Previous to that, I worked at a new build brokers for 17 years and been in the mortgage industry for about 20 years. And I'm the field-based BDM for the Midlands region.
We'll explain that in a minute why the girls are with us. But Tony, just do your introduction for those who haven't seen you before.
Yeah, morning everybody. My name is Tony Hall. I'm head of business development. I've been in the industry longer than these two put together and a bit more on top, which clearly shows. My role is really to make sure that our intermediary partners get everything they need and want.
There you go. So just a little explanation why the ladies are here. Just
yeah, this is so we're as you can see, we're all sat together in a room today, which is brilliant. It's the first of a kind for us, and it's in our Saffron Building Society Community Link, which is a building that we repurposed that was next to our head office for the community. And this is, you know, mostly we struggle to get into it because it's booked by charities and people like that to help and support in the local area. But we're delighted to be here today, and I'm delighted that Lesley and Lizzie, the two L's, are here.
Or double trouble.
Double trouble. Or bloody hell, I think I called them at one point. So this is the first of our Meet the Team. So I'm really pleased that we now have our complement of 4 field-based BDMs and 4 telephony BDMs, and they're partnered up to make sure that whenever you need to get hold of us, you can. And this is the first of our Meet the Regional teams. It's Lesley and Lizzie. It's brilliant.
I'm going to be putting them at the paces with some questions.
Exactly.
So see how good their knowledge is. So just so everyone knows, you would have seen on LinkedIn already, this one is about mortgages for contractors. We're going to do something slightly different to start with and just do what we do. So for those of you that listen to SFI Not So Live, we focus a little bit on the recent news in the market and things that affect you as brokers and sort of give our personal opinions. We have some great guests on there. So putting the girls at their paces and Tony with a couple of recent news stories. And the first one was the government announcing the mortgage charter. I know we talked about this on the podcast, Tony. So maybe just talk about it a little bit to the audience. Obviously it's the big players that have signed up to this. It's not Saffron or some of the building societies, but how important is it for the industry with the way that things are with mortgages?
No, it's a good thing, and hopefully it shows commitment to borrowers that banks and building societies are doing the right things. We personally haven't signed up to it, but we already fulfill all the requirements of the charter anyway, so we didn't ultimately see the need to sign up to it. The key, however, and if friend of the show Phil Lawford was here, he would be really passionately talking. In fact, I know he's talking about this today at an event that he's at, because it can be a bit misleading, because he was talking me through. He's had his letter from his lender talking about the mortgage charter and how it can help you and support you, and it is a little bit dangerous. And the reason I wanted to bring it up is it talks about you can go interest only, you can add to the length of your term, you can take it longer, and all of this sounds great, but there is a consequence of all of this, and therefore it's really important before you do anything that you get advice from ideally your broker. That's what you're there for, because there are some significant implications for going interest only. Yes, it might get cheaper, but you've still got that capital to pay at the end of the loan. Okay, so again, you can only do it once. You can't keep doing it. And the other thing is, if you extend your term, which is great, it might make it helpful now, but you're adding potentially thousands, and in some cases tens of thousands of pounds onto your loan because of the accrued interest, because you're taking it longer. So whilst I'm fully in support and it helps people just get advice. That's what I say to any consumers listening: get advice from the bank or the building society, or better still, from your broker, because don't do anything without that. That's what I would say.
Looking at who the players are, though, they're not likely to have been people that went to brokers, are they? If you look at the likes of HSBC or Barclays or any of these big players, people tend to go to them directly because they're their bank or they get a good offer. So actually, they're not getting any broker advice in the first place, so they're not going to go for broker advice now. So there's a double danger there, surely.
Exactly. Look, all the bank, everybody's taking this really seriously, and you know, if somebody does ring up the bank and look for one of these options, it will be clearly explained. But I suppose I'm just highlighting the concern. But I think again, this ties into something we always talk about with brokers: is what does your website say that you do? Does your website talk about the mortgage charter and how, as an advisor, you can support people to make these critical decisions in a really crucial part of their mortgage life cycle? So if your website doesn't make it clear that you can help people with, even if it's matter-of-fact questions, then that's an option to consider.
Girls, coming to you, anything you want to add to that?
I would say that it will be helpful to a lot of people, but it is only a short-term solution. But having said that, I know that the cost of living for some people can be the difference between buying food or buying nappies. So yeah, it's not a great solution long time, but it is there to help people in the hour of need.
Yeah, no, I agree, but it's each circumstance.
Yeah.
And our brokers are great at looking at individual cases. And then again, even with our underwriters as well, and taking it case by case.
Yeah.
I mean, the advice there is, if there's any consumers watching, I know we're live on LinkedIn, so you've probably got a mortgage of your own, speak to a broker. If you're not a broker, speak to a broker. Best advice we can give there, I think. Come on, Tone. I know this will trigger you. This next story is about the lovely Bank of England rising rates. Now, there's rumours that September will be the last one. There's a lot of economists in this article. Just for people's reference, this is from iNews. They do speak to a lot of experts, a lot of economists who have various different opinions, but pretty much everyone's saying that September could be the last. Now, we cover this on SFI Not So Live, and we had a very heated discussion about the fact that this is the only mechanism they've got to control inflation. So, do you think this is likely to be the last one? Do you think September will be the last one?
I wouldn't want to be an economist at the moment. You know, you're better off putting on a magic hat and reaching into a bucket. So for me, they say it's going to be the last one, but others are saying there might be another. We're certainly closer to the end of the cycle than we are at the start. I think that's the key thing. But you know, the governor has clearly stated that this might be the stop of it rising, but we're not going to be reducing it anytime soon until inflation is under control. And you know, it's dropping, but until it gets to this magical 2 or 3% figure they're talking about. So yeah, I think it will crystallize a market, which is good, and then that will start the knock-on effect of the rates in the market.
We haven't really seen the effect of it yet, have we? Like, there's been so many consecutively that people are still coming to the end of their term. So we've not actually seen a full effect of what they've done.
No, exactly. Look, you've got millions of people whose mortgages are fixed who are not impacted by this at all, and obviously are listening to probably getting stressed listening to all the noise. And actually, I would say don't panic unless your mortgage is due now, because it doesn't impact you. That's the beauty of a fixed rate. Obviously, if it's coming up, then go to your broker, go back to your bank or building society and get the advice you need. But who knows if it's personally, I hope it is, because my mortgage has gone up over £1,000 since this all started. So I could do with it not going up anymore. But yeah, I don't know. It seems to be coming to the end of its cycle.
I think as well, with even speaking to family and friends, and where I've never seen rates at that 15%, whereas when my mum purchased her first property, it was at 15%. So it is that looking at rates, and it seems shocking at the moment and in recent times, but that has happened before.
Yeah, I agree with that, Lizzie, because I'm a little older than you. I first bought my first property back in 2007, and my interest rate was, I know, the worst time ever. Yeah, 6.5%, 110% mortgage as well. And interest rates have been so low for so long, we have kind of gotten used to it. But back then, like 4.99 was a cracking fixed rate. So I've seen it historically over the years.
The key is for people is don't expect to wake up from this really bad, episode of manifest or lost and go, what's up the last 2 years? It's gone back to 2%. It's not going to happen. Not anytime soon. I think if you actually look at when the Bank of England started in the 18th century, if you track the average base, I remember well. Actually, yeah, it was a Tuesday. The sun was shining. But if you look at the stats, actually, the base rate has always averaged 5% in all that period of time. So we're only coming out of a mad season, which has been incredibly beneficial for lots of people, but also a huge shock now. But, as I say, swap rates are stabilising, fixed rates are dropping. I think that's because of the swap rates in the market like stability. As soon as you get some sort of stability and consistency, whether that's high or low, at least lenders can start to price effectively and understand what's happening. So rates are dropping. Primarily it's the high street banks, so it's not the specialists, because actually it's more about solution than it is interest rate with us. Yes, you've got to be in it to win it, and you've got to be affordable, but the rates aren't quite as such tinderbox in terms of up or down. But even across our sector, you're starting to see fixed rates dropping and variable rates kind of going back to where their position was, which is actually low, slightly lower as well. So it's and we're seeing the green shoots of the market in terms of people looking to purchase again. I think they're seeing house prices dropping. The worrying thing, sorry, I'm talking loads here, is the gazumping that's now happening. So that's really worrying for me. We all know what gazumping was, but you've now got purchases, the day of exchange going, I ain't paying you this, I want it 10 grand cheaper, please. Do it now, the deal's off. And that's picking up momentum, which is, again, understandable, because that's 10 grand less I've got to pay, but it's a tricky one, isn't it?
Yeah.
I think it's hard. I think the press have caught up on this and focused it so much on mortgages, but actually it's the whole cost of living crisis the problem. Had we not had everything in our world going up in price, the impact of the mortgages wouldn't have felt as dramatic as they have felt.
Absolutely.
And we just need to get
savings. I remember the highest rates I'd seen of savings were 4%, but you're seeing well above that now.
Which I like, because I like mortgage savings.
I'm over 15 and a half. We launched Tessers back in the late 80s. For the ISA.
I'm still at school. Yeah, stick with that. And I'm old, so that's not about you. Anyway, right. So that's a bit of market news for you. So I hope that helped with some of the younger brokers, especially, to understand. We are here for you, though. So please do put your comments on LinkedIn. They're coming up on my screen. If you wonder what I'm fiddling around with, I am reading your comments and having a look at everything. So do put your comments in, and let's crack on what we're here to talk about. And we're here to talk about mortgages for contractors. Now, we have covered this before, Tone, on SFI Live, and we've covered it on SFI Not So Live as well. But you want to put a particular focus on it at the moment. And why is that? And let's just give it a summary without taking the girls thunder of the next questions. But summary, why is it focused?
Well, look, really, we are a specialist lender, or looking at complex scenarios and complex, making complex easy for people. And Contractor is it's been a growing market for a number of years. But it's really picked up since the pandemic, and people's work-life balance has changed, or, life has just changed the way they want it to work, and therefore contracting and working when you want to work, or 0 hours, or CIS. We cover, I'll let the girls cover all this, but anything to do with not working, full-time for somebody, it's PAYE, is a big area for us. It's a growth in the market. Our flexible approach and policy suits itself well to this kind of lending, and yes, we're just trying to dial it up to make sure everybody's aware of what we can do.
I think, so we have discussed it, and I'm a contractor to a degree. I'm self-employed, but I actually do get contracted out, and I do enjoy the freedom. As you say, since the pandemic, I looked at my life and went, I want to do something different. So, Lizzie, it's your first time with us, so just throw you in the deep end. So, just explain to us what contractors are, who they are, and how you define them at Saffron, because I think my head immediately goes to, Tony said, CIS, like, you know, building site workers, that kind of thing, but it expands way beyond that.
Yeah, so we look at a variety. So we look at like agency, short term, long term, CIS workers, as Tony mentioned, 0 hours contractors. We'll look at them, and we're not making them go down a self-employed route. We will look at them as their income as a contractor.
So it's a specific product for contractors.
Yes, so it's a specific range, and with the calculations that we look at as well, we're going to maximise their affordability by looking at their contract rather than looking at their SA302s, etc.
Okay, we'll talk a little bit in detail about your flexibility on criteria and things like that in a second. But Lesley, just how difficult has it been for contractors? So if we were to go down the traditional lender route, you know, you go with your own bank and own route. I suppose it's quite difficult. You know, it's a difficult access area for them, isn't it? So this product is ideal for that.
Yeah, absolutely. I mean, as Tony said, the world has changed since the pandemic, and mortgage lending should really be changing with it. I mean, historically and still now, to a large extent, a lot of lenders will class contractors as self-employed. Therefore, a lot of lenders need like 2 or 3 years accounts, and we're just trying to be as flexible as possible for contractors to make it easy for them to get a mortgage, you know. And just like be that little bit more flexible for people that want to work around the children, or want to take time out, maybe have a sabbatical, maybe go travelling, whatever reason. I mean, we can look at gaps in employment history as well, or contracting history. So we just want to be as flexible as possible. Okay.
So how does it differ from a self-employed mortgage? And so I'll open the field to this one. But obviously, we've talked about self-employed mortgage a lot on SFI. Like, we haven't really focused specifically on contractors, but what's different? Talk about some of the criteria. You just said there that you don't need so many years of accounts.
Yeah.
How flexible is it, and how flexible can you be? Like, how long does somebody have to have experience in a role, for instance, or anything like that?
So we only need someone, if we're looking at a day rate contractor, for example, they just need 3 months as a contractor, and we need 2 years work experience. But that can be a totally different field. So they could have been.
So 2 years in anything.
Yeah.
It doesn't have to be contracting either. So you can literally work, I don't know, in your local boots for 2 years and then say, I'm a daily rate worker now. And if it's their very first contract, we would need 3 months in it. But if they have previous contracting experience, we can look at just 1 month in there.
Current contract.
In the current contract, sorry.
Yeah.
Okay.
So that's pretty flexible. So hang on, let me just get this straight. Just for any young brokers out there, just so, because there will be newbie brokers out there who are watching this for education. So they could have been, as you say, working in boots, gone into it. So that doesn't need to be a relative experience.
And they could just be employed, standard fixed term, just employed permanently at boots, and then decide to want to be a contractor. And 3 months in if it's the very first contracting role. But if they have previous contracting experience but not in the same line of work, we can consider one month into the contract. And even if they do have prior contracting experience but in the same field, perhaps for 1 year, again, we can be flexible. We can maybe consider day one as well, just depends on the case overall. So we try and be as flexible as possible, and because we manually underwrite, we will look at things on a case-by-case basis, not just a computer says yes or no, and that's where our flexibility really comes in.
Just to expand on that, it could be, as I said, someone working in boots on the counter, but then they've got now 3 months experience as an IT contractor, so it's very different roles. It's not that they have to be doing a contract in retail sort of thing.
Do put your comments and questions in. We're going to come to live questions throughout this webinar, so do put your comments on LinkedIn as questions, and I'll look at them and then we'll put them to the panel. Just Tony, just something on what Lesley just said, just to elaborate slightly for new brokers that are watching us through in a new platform. What does manual underwriting, your common sense approach, actually mean? And we've explained this so many times. You must be able to roll this off straight away.
Well, you know, manual underwriting sometimes comes across as though we haven't got tech involved, you know, and it's all bits of paper. It's not that at all. It's probably better to describe it as personal underwriting. So every single case best way to describe it is we use technology to get your case to the right person to make the right decision at the right time. So every case, our system will look at it and go, yeah, that fits, or actually if it's wildly out of what we want in our policy, it will say no. If it's unsure, it'll refer across. But most of the time it's going to give you a yes or no, because that's important. But then it goes into an underwriter who's then got the experience to look at it and look around it. Okay. So, and again, the beauty of our system is you can tell us the story, which we always say. So give us the reason, you know, the case to come to us, it's going to have a reason. Otherwise, it'll have gone to a high street lender somewhere cheaper. Right? We don't kid ourselves that, you know, we're the first choice for every case. If it's a A1 case, we're not. But if it hasn't gone there, it's come to us for a reason, and therefore give us that reason, and then that allows us to look at it and think about it, chat to you about it if we need to, and make a call.
Yeah.
You know, it is that flexibility.
To give an example of this, there was a case that we had a couple of weeks ago whereby the customer that was looking to come to us was a trainee GP with no previous work experience, but going on to a 2-year contract. So our criteria states that technically she would have needed to have been in that contract for 3 months, because it was her very first contract, and our criteria states that technically she would have needed to have some kind of working history for 2 years prior. But, you know, trainee GP, professional, obviously there's always going to be a need. So in that scenario, we could look at that after 1 month on the contract, because the case makes sense.
Yeah.
One of the key things I just want to say to kind of make clear for people as to why we treat contracting different to self-employed is, to Lizzie's point about maximising income and affordability. So, bit of history lesson. So before contracting as a product started, you would treat yourself employed. Okay, and the challenge that every self-employed person will tell you is you don't always want to show how much you earn, because that means you pay more tax. So that's why, you know, accountants are here to do their job rather than look at legal ways to minimise your taxable position. So, but the problem with that and for contractors was you weren't able to maximise the full value of your contract, because you were taking the net position, profit position after the equation. So contracting product was born from that actually, no, let's use the contract pretty much like you use a PAYE. So we use gross income.
Yeah.
We use the gross value of the contract, and then we work that into an equation. For us, it's the daily rate, days you work times 48 weeks, which is good because some are 46. So we allow a bit more extra there, which allows that 42. But that's why we have contracting. It's different to self-employed. So they might be self-employed as a limited company. That's all fine, but we're going off that gross value of the contract, which basically says you can borrow more technically, because we're not looking at the net position after tax.
What we'll do to finish off this webinar, before we go into your own cases, we'll just talk about the self-employed product, just to finish it off and tail it off. But just before we go in, Casey, thanks for your comment. We're coming to you in a second. Don't worry, we're going to come back to you. Likewise, everyone else, please do pop the comments in. As I just said, Criteria Clinic, which is the last 15 minutes, is your chance to put actual cases to the guys and girls, and they can answer those directly. So do pop those in the chat. We will see them. We are popping out. So Katie, we will be with you in just a second. So just on, I just want to say something about technology, actually, because we were at an event last year, and one of my panel discussions was on technology. And actually, one of the limitations of AI technology is exactly what you're discussing there. The fact that, yes, these new lenders are popping up, and there's these new, you know, online lenders, no physical presence anywhere, and all of a sudden they're relying on AI and algorithms to survive. Or actually, it really does make the case to work with a broker and to work with smaller lenders, surely. I mean, you guys must all agree with that.
Yeah, absolutely. I think there will always be a need for a broker and that advice, and there'll always be a need for lenders such as ourselves, where we can look at cases on a case-by-case basis, and an underwriter makes the decision based on the case as a whole, rather than just computer saying yes or no.
Yes, right.
No, and another example of one that I've had quite recently, the applicant was 0 hours, but it was the way that their contract was, it didn't have an end date, but then every 3 months it was renewed.
Right.
And ideally, most of the time we would say we want an end date, but this chap had done it for a number of months, and we were comfortable that it was going to get renewed. So we took an approach on that. First of all, on paper you might look at our criteria and go no, but that's where you need to have a conversation with us.
Yeah.
And we can actually we speak with our underwriters every morning.
I was going to say, Lesley, that was going to be a question actually I was going to throw at you guys. Yeah, no, carry on, because it's very true, isn't it? It's not just this manual underwriting, but it's actually the BDMs and the engagement with underwriters. I think makes you quite unique.
Oh yeah,
not unique. Professor others do the same, but you know, it's one of the unique.
We even look at we get a report of all the declines the day before, so we will look at it, and sometimes yes, you may have had the broker contact you as soon as they've got a straight away decline, but if the broker's not contacted us, we're still looking at that case.
So we don't actively contact them?
Yeah, so
Okay.
I will even notify them and elaborate on their decline to educate them on what our policy is, or if it is I've got a bit of a, well, what's happened here? Pick up the phone with the broker, get a bit more information, and then go to the underwriter, rather than it be the broker contact you to go to the underwriter. As you mentioned. Yeah.
So that's really unique. We've talked about this before, haven't we? This is one of the big changes you've made since you've been with Saffron, isn't it, Tony? This interaction, and it, I suppose, not to talk about why you're not here, but it does make the BDM team more knowledgeable, understanding of the underwriting process. So actually, when you guys are contacting these guys, you're getting a much more educated approach than you would for normal ones, wouldn't you?
Yeah, look, the beauty is of the underwriting meeting and you know, how I relentlessly drive these people is to really know and understand our policy, okay? Because when they say no, we mean no. So don't worry, don't bother with that. You've missed an opportunity. When they say I don't know or I'm not sure, is when we take it to the underwriter surgery, 9:30 every morning. You'll have your answer by just after 10, and it stops you all the hassle of having to dip. We'll tell you, put it forward this way. You might want to say it like this, etc., etc. So, but that's the beauty of quality BDMs that really are passionate and care about it.
That's why these guys are here. That's why we're introducing
How we
you.
growing?
And they're that good.
That's why we've grown the team from 2 to 14. And none of those staff have got process anything. It's all about helping you. Every single one of them is around help. Well, the only thing we process is new registrations. And helping brokers with that.
We'll talk about it in a second. We'll go on to documentation. We'll go on to the system in a second. But just to you, Lesley, because you used to be a broker. So how refreshing is it to be a BDM looking at other brokers and the service you get? You must look and think, well, this is a refreshing new approach and a new way of dealing and working. So talking to the brokers that are watching, how refreshing is it for you to see it from this side?
Massively so, because I think as a broker, well, certainly when I was a broker, from a BDM, I wanted to know if can I get hold of a BDM? Are they going to come back to me on phone and email as we all always do? But also, why is this decline? Can you shed any light on it? Can you help me with it? Can you help me get this through?
Well, nobody wants to go back to the borrower and say just no. You need to give them something, don't you?
So Lizzie and I always say to our brokers, if you get anything other than an accept on a decision in principle or on a full mortgage application, pick up the phone or drop us an email and we will have a look into it for you. Don't ever just take it as a straight no. We will always have a look to see our very best, or you know, if it doesn't quite fit how it is now, is it something we could look at in 3 months' time, or is it something we could look at another month? Could there perhaps, you know, is there a way? Is there a way that we can get it through for you? Try and get it over the line. We'll always look and go that extra mile for our brokers, which I think is massively important.
And the other thing that brokers might not see but will experience from my guys is they're the eyes and ears for you. So the feedback they provide me drives our business forward. So changes in, we could talk about documentation in a minute, but changes in procedure, massive changes to our lending policy have all come from my team feeding back, going, others do this, brokers have told us they've got a problem with this, can we do it? And that's driven our policy and our products and our service. So that's the power. So if you ever want to feed back, speak to your BDM, because they're bring it straight to me.
I can reinforce that as well, the fact that when I interviewed for the job, I mentioned about the way that we did the inspections exactly at the time, and around about 6 to 8 weeks later, the change was implemented. So our voice as BDMs is heard, so it's always important to get.
And you're the voice of the broker, so it's a complete.
Whether that be positive or negative, we will always take it on board and try and make positive changes.
We do learn from these webinars as much as you learn from us. So if you have any comments of working with Saffron, working with other lenders, things and issues you're seeing in the market, and you think we need to get this sorted, pop the comments on here, because other brokers are going to see the comments, we're going to see them. And as these guys have just said, there's a chance for Saffron to implement new things and work with you better. So use this as a platform. If you're sitting watching us now, use this as a platform, pop the comment in, and I'll come back to you. William, thank you. I'm seeing the comments, don't worry. We will come to you in just a second, but we'll just quickly touch on documentation system. So first of all, let's just talk about registering, Tony, because we talked about this before, but there'll be a new audience now. We're on LinkedIn. So how easy is it to register? Why should people register? And you know, and what happens after the process?
Well, registration is super easy. Just go on to the Saffron intermediary to It's easy for me to say. Go onto the website.
Yeah.
There you go. Put my teeth back in.
I'll pop it on the screen for you guys, just Tony can't say it.
Go to the top right hand corner and click register. And it's simple as that. Follow the journey there.
It's about a minute, if that.
Yeah, because we timed it, haven't we?
Yeah.
And then if you've got an urgent case, because we say 24 hours for registration, that allows us to do our background checks and get back to you. But I know Leanna, who does a lot of them, will sit there and do them immediately for people if it's urgent. I know she did 3 yesterday because we were pulling products today for a launch tomorrow, and she was helping them get on and do their registrations today. So register if you want to use us. If you're not registered, you have to be registered to use us. But the key thing is, if you're not registered, we don't really know who you are. So that gives a fighting chance of, as soon as you register, you will get a call from one of these lovely ladies to welcome you to Saffron, find out about you and your business and your colleagues and how we can support you. But it also means that we can then communicate to you when we update products, or we change our criteria, or we make service changes, or we just want to tell you about something we found out that we think might be interesting for you. We can't do any of that if you're not registered. So as you say, it's a minute, as Lizzie says, it's a minute of your time. Crack on. If you get stuck, ring the IST number, 01799 582 925.
Yeah.
Whoa, in 3 years, that's the first time he's got that first time.
Don't know my mobile number, but I know that number. Give that number a call and they will talk you through it.
I think that's really key. One thing I wanted you to say, and you did say it, was the immediate phone call, the introduction, the chat, and a chance for you guys to chat to. Might not be these 2 ladies, but as you say, Tony, just explain the regional structure just really quickly. So
yeah, so we're kind of split. We've got south and southeast, southeast, in London, south and southwest, creeping into Wales a little bit, central, which is these lovelies, and then northern as well. But we go on postcode. So rather than a classic geographic area, because it's sadly they don't all fit into a postcode, into a box like that. So we go by postcode. Easiest way to find your BDM. Go on the website, go on Branch Finder, click on that Branch Finder, BDM Finder.
it's on the contact page.
But the first 2 characters of your postcode, and a lovely face will pop up explaining each source. And it said for each region, we have field-based BDM, telephone BDM.
And what's the difference between your 2 roles? So, Liz, you explain yours first, and then Lesley can go.
Yeah, of course. So obviously I'm telephone based. There's no sort of day-to-day role, essentially. There are the odd bits, but every day is different. But just as an overview of going through our unique selling points virtually, through Teams or on the telephone, find out about the brokers as well. So I will do my research, and where Tony mentions about sort of websites, I want to make it the best journey for you, and I will look at your website to find out what you specialise in, because then I can put you not in a category, but if there is any good things that are coming out, then I can direct it directly to you. But if there is areas that you don't touch at all, I don't want to send you loads of jargon over, which isn't going to work well. But yeah, the USP chats, I would say, is giving me the opportunity to find out more directly about you, and also go through them quirky cases. So you can obviously look at the website and find out information. But as Lizzie and I said, there is so many occasions where we will take a different view on it, although you'd think it's a no from looking at the website.
Okay, and Lesley, how do you differ? Obviously,
very similar roles in pretty much everything Lizzie just said there. But, I am the field base, so I'm out on the road, attending broker meetings, meeting brokers face to face, going to events, also just more maintaining and developing new relationships with brokers. I love being out and about, and obviously we both have direct dials out of my mobile, and you can email both of us as well. But I am on the road a lot, so I would always come back to you, but for a quicker answer, a lot of brokers will go to Lizzie or phone Lizzie first before me, and vice versa. So
it's a good dynamic, isn't it? Because things have changed. So since we started SFI Live, we were trapped at home, weren't we? When I was in an office, but I was on my own. There was nobody else there, but we were trapped at home. It is coming back now. People want to see you face to face more now.
We do work very well together, and we've got certain brokers, got even a broker from yesterday, so you've got double trouble. But we bounce off one another well, and also if a broker has tried to contact both of us, we might just drop a note of, I think you spoke to Lesley, just to check everything's on, if anything else come up.
Yeah.
Now, the key way to explain what these wonderful people do and their colleagues do is they're called business development, but that's not really the true title, and it's made me think about, should I change it, right? Because what they are is business partners to you. Okay, it's not just about product, because that's not what our proposition's about. We're a solution focused lender. These guys will help you find the solution to the problems you face with your clients. Okay, but not only that, we're really keen on helping you grow your business, because that's really important to us. So how can we help you open your eyes to opportunities that you may have passed off before, or handed off to somebody else, or just plainly said, that's not us. Classic would be self-built. So, you know, we're passionate about different webinar for another day, but we're passionate about that. But since I've got people in the field, and I didn't have any before, we've got more and more brokers coming to us going, you talk to me about self, but I want to do it. How do I do it? Help me. And that could be anything, contractor or any products. They're business partners. That's a really important definition.
Yeah, and also as well, we're always trying to get the Saffron brand out there as well. You know, we are aware that we're a smaller building society, but doing podcasts such as this, calling out, doing USP chats by the phone, going out to broker meetings, giving brokers a call, kind of come out to see you, and just really letting brokers know what we do and how flexible we can be. And I think it's really important to have lenders such as us in the marketplace, because obviously everybody has a place in the market, but it's just to get our name out there, and the amount of brokers that say, wow, I can't believe I've never used Saffron before, and it gives us such a buzz, doesn't it?
9 out of 10 conversations I wouldn't even ask that.
I would never think that you would do that in your lending criteria, and it's just it gives us both a real buzz, doesn't it? And then, you know, seeing the first case come in, and like we can help them see it through until offer and completion. So it's building relationships as well.
We deviate slightly. Part of the reason the ladies are here, and this is Tony and I's little discussion we had a few weeks ago, we're going to be introducing you to all the different teams. So that deviated slightly from the topic, but we'll go back to it. But I just wanted to really get that in there, because we were already leading that way, weren't we? So we've just talked about registering. Let's talk about submitting a DIP and the documentation. So Lesley, you first on the documentation. So just explain what we need we're going back to contractors. Sorry, guys. We will come back to you, Katie and William, don't worry. But just a little bit on the documentation you need to, and what brokers might need to understand, maybe some of the slip-ups that will make you have to go back or might cause a delay.
Absolutely. So for contractors, so this is for like your daily rate workers, your short-term employed fixed-term contract workers. We currently ask for 1 month's invoice, 1 month's bank statement to show the money going in the bank, and we will also need a copy of their CV and a copy of their current contract. So the CV is there to show, do they have the 2-year working history? And if not, we just need to understand what they have been doing for us to look at the, you know, considering the case. But as standard, so it's 1 month invoices, copy of the current contract, 1 month bank statement, and their CV for contractors. And then what falls under our contractor range is also CIS workers, construction industry scheme. So the CIS workers, we do want them to have 1 year in the building trades, and it doesn't need to be 1 year CIS. And we will ask for 3 month CIS slips. We will ask for 1 month's bank statement, 3 months bank statements for them, sorry. And CIS workers rarely have a contract, so generally we won't ask for that, but we may ask for a CV.
Just on that point of, it was something previously, but where we've fed back that CIS workers generally don't have a contract. I've got family that are CIS contractors, and even my brother, he could be down the pub, and it's talking to his friends who are within the industry. One's a plasterer, he's a chippy, someone else is an electrician. It's like, what jobs have you got on? And it's a conversation and shake and let's have a pint together.
So just go back to what you just said. So they needed to be in the trade for a year, but only 3 months of CIS. So they could have been, I don't know, a laggy of some kind, and then they've got a trade and they've got themselves. So actually, while they're building up their experience,
Well, no, and I would personally say that I've never seen someone, I could be wrong obviously, but a day one CIS, I've not seen that. They've normally had that experience, employed, and then they've gone down the self-employed route. Well, or self-employed or CIS.
And again, if say for instance they had a couple of years in the building industry and they only had 2 CIS slips, for example, our criteria states 3. But again, pick up the phone, drop us an email. We might be able to take a really positive view on that, so it's not set in stone.
And going back to your telling a story, Tony, not so much perhaps with this as we would with the self-employed, so a lot of those we have to tell a bit more of a story, but just explain what you mean by tell a story and how they might do that when they're submitting it.
Yeah, I mean, with any case with us, obviously, when we're assessing or lending responsibly, we want to, or the underwriters want to ascertain that the income that we're using is sustainable. So the easiest way, we have a notes function on our portal. You just click on the front page with your welcome page as a note function. You can add notes to your case, and the easiest way, one of our other BDMs explained it, which I think is brilliant, is to put it into 3 boxes: past, present, and future. So what income did they earn? What they're doing now, and how does that differ? And what's the future look like? Is it sustainable? And if you kind of put your notes into that, that enables our underwriters to take that view. They may come back and question a few things, but that's the easiest way. Give us the reason why you're coming to us. As I said, you know, we don't. If it's just a normal case, it wouldn't come to us because you'd be able to source it very cheaper elsewhere.
Preempting what the underwriter's going to ask
Exactly.
as well. And if you're asking us the question, that's the information we want as that note.
The key thing I will say about what we do compared to other lenders is other lenders treat CIS as self-employed. So they'll want to use SA 302s, as the reason to ascertain income. We're not. We're saying we'll use your CIS slips as income. So almost like a PAYE rather than a payslip CIS. So that's our differentiation. Makes it much easier for those kinds of employment.
So, any questions on that? Let us know. We're going to come to the viewers in just 1 second, but the important bit that every broker's going to know if they've been on the website yet, and who can we put on the spot with the stats? So what we're looking at LTV rates at the moment, what they currently stand at.
So we have got some new products launching tomorrow.
Oh, tomorrow.
And tomorrow. Even within our contractor range. So the contractor range, we do allow first-time buyers on that range, and it's up to 90% loan to value. I'm trying to think of products because I've got a muddle of the old and current.
Anyone?
They're launching tomorrow, so watch this space.
Have a look at the well, you're on there, but on the LinkedIn page, they will be live tomorrow because obviously there is a rape area. But they just so new products tomorrow. Any other changes they need to know other than rates?
Well, the key thing from contractors is not only contractor, but we're bringing from tomorrow. We'll have our whole range available again. So, but over the last couple of months, we withdrew a number of our products because of all the madness in the market, but also for operational reasons and commercially. A lot of our rates weren't making us any money, and therefore there's no point selling stuff you don't make any money on. But it was a lot about operational to make sure that we maintain the service to our brokers, which is really important. So we've been drip feeding our way back into the market, and tomorrow is the whole lot's back. So the full product range is back. You know, everyday buy-to-lets, which we know people have been looking forward to. And the really exciting one, again, sorry, off topic, is the return of our fixed rate, 90%, 5 years for 1 year self-employed, which is we get asked a lot, which we're bringing back from tomorrow.
Right. Okay, let's go over to viewers, shall we? So, Katie, you've been hanging on for ages, so apologies.
Is in regards to, although we are speaking about contractors, we do apply that income to if it's a buy-to-let as well. So we do get asked that of, well, if it's buy-to-let, do you want them to have X amount of experience? No, it's still the same as the 3 months, 2 years. So, and self-build as well.
There we go. Okay, so Katie, finally, sorry about this, but we are with you now. She has a client who contracts, but is the sole director of a limited company. For this, in this situation, would you look at the contract and look at the income from this, or are you just looking at salary and dividends from the company? If that's the case, will you also look at retained profit?
So in this scenario, if the contract shows a higher income than his more tax efficient limited company, we can look at his contract as income, and we can either take like his daily rate times 5 sometimes 48 weeks on the contractor range of products. So it needs to be specifically that product, and you can look at the value of the contract essentially.
Okay. I hope that answers your question, Katie, and over to William, who's also been waiting a while. Thanks, William. How do you treat contractors that are also paid via an umbrella? Do you need to see the pay slips, or will you use the contract assignment schedule and bank statements? Umbrella pay slips are often confusing and not matching the contract if you use them.
Thanks for your question, William. I would say in this scenario, Lizzie or I would probably want to see the pay slips first to ascertain the income that we would use. I'm not sure if you mean if they're paid by an umbrella company as well as a contract, because we can look at two as long as there's no more than 60 hours across both weeks.
No, I think he's basically he's rather than going direct via limited company, he's contracting via an umbrella company. So we would use the contract.
Sorry, I was overcomplicating it there.
Okay, we'll look at the contract. Great stuff. So looks like you answered Katie's question. So William, I hope that answered your question. Anyone else with any more questions? You've got 15 minutes to get them on the screen. So just pop them as a comment. So where you're watching, just literally write them in a comment underneath. Pop them to us. And as I said earlier, any commentary you've got on the way these guys are working and how that's working for you. Have you worked with Saffron? Have you not worked with Saffron? You find it quite refreshing. Pop that in there for us, because it really helps, as Tony said, it helps them to develop and push the team and move it forward. So do pop those in. If you want to have a look at any of the products, I'm going to pop the website on the screen now, so you can have a look when we're over. So while we wait for anybody else's comments, let's just pick up, Tony, on what we said earlier about the self-employed, because we talk about it a lot, and there's been some changes. Maybe just talk about how you handle self-employed differently, or your criteria and how that works.
Well, we made a significant change for us about 4 months ago, where we used to have a split range, which we still have, which was 1 or 2 years self-employed was on our specialist product, and then 3 years or more was on our standard product. We made that change to specialist is just 1 year. Okay, and then if you've got more than 1 year, you've got 2 years trading, you can go on any of our standard products, including first-time buyer, including JVSP, including self-build, whereas before we do that. And we've seen a big increase in 2-year business as a result. So what we've done was the right thing to do. But we have our specialist 1 year range. So that is somebody, as it says, got to be trading a year, and then we can consider them with a projection from their accountant. We don't use the projection as income, but it allows us to, at the underwriters, to look at it, do the sniff test and go, yeah, okay, that looks like this is going to be sustainable. So that's literally, as it says, it's for those trading for 1 year. We've had a 90% discounted product for, we ever would do that, and we've had a
5 year tomorrow morning.
And we got the 5 year launching tomorrow, as I just said. Yeah, it's 5 year fixed, 90%.
So that's we have a half the press webinar, isn't it? And we've got some stuff coming tomorrow. So look out on this LinkedIn page for all product releases tomorrow. If not, head over to the website. William's come up with another question. Just put on the screen for the viewers so they can read it along with me. So one other question: hourly paid contractors, i.e. social workers, paid £36 per hour, 37 hours a week. Is it the same calculation as if they were a day rate? The typical contract states 6 months contract with the above pay. Let you have a read of that.
Yeah, so the way that we'll calculate it is looking essentially at the day rate, if they're paid hourly, so just getting a day rate from their hourly rate as such, then times how many days they've worked, times by 48, and the same with CIS as well. That's the same calculation. Like with the annualisation, we do it by 48, unless the contract does state it in a different manner.
Okay, and this is the criteria clinic for the next 10 minutes. So if you've got any, it doesn't have to be contractor. So any cases you've got going on at the moment with any lender, don't mention them. If you've got anything going on, any cases, obviously keep some final details up. If there's anything you want to ask a question of on, the common sense lending and the underwriting approach, so maybe they can help you with the case you've got, pop that in the chat room now or into the chat on LinkedIn now, and we will get back to that. No worries, William. We'll answer William's question. It's all good. So, you just dropped in a load of other products there. Loads of products all just came out in your mouths at one go. And also, you said that first-time buyers on a lot of them as well. So maybe one that stuck out for me, and it's one of my favourites to talk about, is JVSP. So, in the cost of living crisis we're in now, could be a saviour for first-time buyers. So, for any brokers out there, if you've not researched the JBSP before. This is your moment. Who wants to take it?
Yes,
Go on, Lizzie.
so the main thing with our JBSP that makes us stand out is we base the term off of the borrower rather than the supporter. So as long as the supporter, who needs to be an immediate family member, as long as they're no older than 70 at application, we can essentially do a 40-year term. Whereas other lenders will cut the term based on the supporter. You might go, well, that's taking someone to over 100. The reason being is that product is designed for after 5 to 10 years for the supporter to come off, and the borrower should be able to support.
So that's the person to get their income up and pass affordability.
Yeah. So we don't essentially look at a specific role of have they got growth. We're not going to say, yeah, are they in this role? We won't do it. But it's the loan to value hopefully would come down slightly and things like that, and they'd be able to support it. So the caveat of that is that the borrowers, so you can have up to 2 borrowers, but just 1 supporter. But the 2 borrowers need to be able to support 70% of the loan, and the supporter can make up the further 30. But don't panic, there is a calculator on the website that factors that in.
We'll talk about it in a second when we get ready to go.
And with obviously the costs of houses at the moment and the interest rates, and we love first-time buyers here at Saffron. It's ideal for those borrowers that are just needing that stretch, you know, perhaps 6 times their income, to help them get on the ladder and make it more affordable by having the longer term as well. So our product is completely different to other lenders in that sense. So it's fantastic.
Just to pick up, you said immediate family members, but I know that Saffron's more flexible than most when it comes to who these people are. So do you want to just detail who they are? Because I think you do differ from a lot of lenders.
Yeah, so we say immediate family members, but always refer it if it is tell us the story, who they are, how long they've been in their lives, why they're looking to do it that way. Pick up the phone or drop us an email and we can take a view on it.
So yeah, even aunts, uncles and things, where others it might be just parents.
And
we've had one before where it was a godparent as well.
Yeah. And
so
this product goes right up to 95% loan to value as well, which is fantastic.
And the other exciting thing is we're going to be expanding this JBSP proposition.
Watch this
Watch this space. So
we'll launch that hopefully on the webinar.
Yeah, we will do, but it won't just, it's not first time buyers.
And that is from feedback. So,
So again,
current proposition, so where we allow 2 borrowers, as long as one is a first time buyer, the other applicant could have previously owned, but they can't own at application. But it's going to be not just for first time buyers.
Yeah, it's helping people.
For the wider
It's going to get in trouble for talking about this. You've done this before. Tony does this a lot. He starts talking. He goes, oh, I don't.
It's just timing. It's coming.
And I think it reflects, as you were saying, it reflects you listening to brokers and giving the clients feedback as well. So we've only got a few minutes left. So if you want to put your comments and questions in, please let us know. Pop it in there now. Any particular products you want to ask a question about while you've got the guys here, pop it in. We will get to it. Tone, let's just go to, you're saying all these new products coming out. There's been a lot of developers, a lot of movements in Saffron since we've been working together. I've been doing this 3 years now.
No, that's fine.
It's quite scary. It is
actually 3 years this month.
It's 3 years this month, and also we've only seen each other about 3 times in person. But I want to pick on something you said earlier. One of the things that we did do face to face when we launched Intermediaries, which is a campaign that for some brokers may have seen that a little time ago, but it was all about making life easier. And you say you brought these guys in. There was 2.5 people when you started. It was, But just maybe some of the developments, the more recent ones, because I've seen a lot going on. I'm not, involved with Saffron as much as I used to be, and I'm seeing lots of changes. What can brokers expect from Saffron over the next few months? What are they going to see and what they're going to experience?
Well, the key is about, it's about the relentless execution of our desire to provide amazing service. So we're constantly looking at ways to improve what we do, and a lot of the feedback's around reduce the documentation. So we've really reduced the amount of documentation that we request from brokers to support a case. Most scenarios it's one bank statement, a pay slip, and a P60 for PAYE and stuff. For employed it's 1 year or 2 years, so it's a lot easier. But that's not enough, because some of the times it's the bounce back between underwriter asking questions and stuff, and we've realized that actually that is sometimes because we might want to ask another question because we do look around the fringes, but Also, our system doesn't help, excuse me, because it condenses the checklists of things we want from you when you get a case. So the biggest thing I can say is click on expand, and that will tell you all the things we want. So a lot of brokers get quite upset. I've given you the 4 things you need. No, there's 6. You just didn't look. So, but we're looking at how can I make that expand box bigger so you don't have to do it.
Yeah.
So it's that kind of stuff. We're always looking to get better. You know, we're always striving to be a 5-star service provider. We use smart money people to do our regular broker engagement, and we're now at 4-star. We were 4-star. We dropped slightly because we had a bit of a wobble last year. We got it back to 4, and we're close to 5. But we're not going to stop at 5. It's about 5+ for us. It's about continue looking at how do we provide that service that gives you the comfort to use us time and time again.
I just want to actually shout out to our business development assistants, because say for example, if someone contacted now, Lesley and I are on here, but they are clued up. They know the criteria just as well as we do. They know the system. So it's not just a call centre. You will get the answers, and they're covering email, phones, and also live chat.
When we talk about live chat, actually, some of the things I was going to say, because we've got a few minutes left, so let's just explain to the brokers how they can get in touch with you. Live chat. Tell us about live chat. Tell us how it works, because we haven't announced it before. But
so you can come on, and it could be a new inquiry, or even if you've got a case in progress, we will clear security over the live chat. Once we've done that, then we can have a look at the case and provide an update on there. So it is mainly looked after by the business development assistants. However, the telephone BDMs do provide support. So if we are having an influx of calls, you may get myself, Debbie, Sophie, or
even Lesley. That everybody, we're all connected.
Yeah,
but it's a chance for the brokers to multitask, isn't it? So you have to be on a live chat on the phone to a client at the same time. It's a chance to just always be in contact.
Yeah, absolutely.
Well, we had one the other day where you were in a broker's office and a query on a dip.
Yeah.
And she rang the head of underwriting and gave her the answer whilst she was there.
And
that's how quickly we can do so.
Absolutely.
The website's on the screen, guys. saffronforintermediaries.co.uk. It's on the screen. Everything's on there, and how to get in touch. We talked about the BDM finder. Just go to the contact page. You'll find find your BDM or BDM finder. I can't remember what it says now, but it is on there. So everything we need to know, and telephone numbers, email addresses, everything's on there that you need to get in touch with the guys. I think this has been a successful first studio experience. Don't you?
I think it has.
Okay. Sorry.
I'm in the clammy hands.
I'm thinking I'm bloody freezing.
Do you know what? With the aircon on, and I realised halfway through I was supposed to put a jacket on, and I haven't got on. So I've actually forgot to put my jacket on. So I apologise for the scruffy. There we go. So but I hope you've enjoyed it, and I hope you can see and hear us okay. Let me just check this comment. Thank you. Someone just a comment saying love live chat.
Thanks,
Richard. There you go, Richard. We love that. I'm just going to pop it on the screen so everyone knows it. But I really hope you've enjoyed this format. It's something different. We're always looking to improve and change the way we do SFI Live. And I want to do a big plug because we are super proud of it. I'm going to pop this on the screen as well. Our regular monthly podcast, SFI Not So Live, which is with Tony and I every month. And then we have other members of the team. And we have some industry professionals. So we get everything from journalists to brokers to distributors. We bring people all the time. If you're watching and you'd like to be a guest on SFI Not So Live, we'd love to have you. It's all done remotely. You don't have to travel. So if you would like to get involved with that, just pop onto the website and just send the guys an email, and whoever your BDM is, just let them know, and you can come and join us. Or LinkedIn. Everybody's on LinkedIn. If you've come in halfway through, you've missed some of this, this will be available on demand within a minute of us going offline. So it'll be just on this page. So go on this page to have a look, and do follow Saffron for Intermediaries LinkedIn page, so we'll notify you with next month, which is due. We haven't got a date yet. We haven't set a date, so we will. But it's been an absolute pleasure and really nice to see you in person. Yeah. I've never met Lizzie. Yeah. I've met Lesley once when she started. I did an interview with you on your first day, and I love seeing Tony. Tony and I do badly me up every now and then, but we're going to try and do this on a more regular basis. If you enjoyed it, your comments will be really welcome, so do pop it underneath. And as I say, we will be back in October. We haven't got a date yet. Back in October, we will announce on LinkedIn. Yeah, it's been really nice to have you guys here, and thank you to the guys that have written the comments as well. We always appreciate it, and we'll see you next month.
Yeah.
Goodbye, everyone.